Hey there, and welcome back to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today we're dialing things way back to the basics. Let me ask you a question. Have you ever typed how to start investing into Google and found yourself even more confused than when you started? Like you opened 10 tabs and still walked away thinking, okay, but where do I actually begin? You're not alone. So many people want to start investing, whether it's to build wealth, grow a second stream of income, or just not let their money sit around doing nothing. But the moment you try to take that first step, you hit this wall of jargon, conflicting advice, and platforms that make you feel like you need an economics degree just to sign up. Well, today we're going to break that wall down completely. It doesn't matter where you live. It doesn't matter how much money you have to start. And it definitely doesn't matter if you've never placed a single trade in your life. This episode is for you, the absolute beginner who's ready to invest but doesn't know how. So grab your coffee, notebook, or just your full attention. This is Investing 101. How to get started, no matter where you live. Step 1. What does investing actually mean? Let's begin with the most important foundation, what investing really is. At its core, investing is the act of using your money to buy assets that you believe will either grow in value or produce income over time. And that right there is the key. The growth, the income. Investing is not spending. It's not gambling. It's putting your money to work for your future. Now, let's talk about the main types of investments you'll probably encounter as a beginner. First, we've got stocks, which means buying a share of ownership in a company. When that company grows or performs well, the value of your stock usually goes up. Stocks can offer great returns, but they can also be volatile, meaning prices jump up and down. Then we have bonds. These are loans you make to a company or government. They pay you interest over time. Bonds are usually considered safer than stocks, but they also offer lower returns. Next up, ETFs and mutual funds. These are basically bundles of stocks or bonds put together into one investment product. Think of it like a basket. You're not just investing in one company, you're investing in a group of them. This makes diversification easy, which is great for reducing risk. There's also real estate, either physical property or REITs, which are real estate investment trusts. These can give you both rental income and capital appreciation. And yes, we can't forget crypto. Digital assets like Bitcoin and Ethereum have become a major part of the conversation. They're volatile and high risk, but for some, they offer high potential rewards. Each of these asset classes plays a different role in your portfolio. Some give you growth, others give you stability or income. Knowing what each one does will help you choose what fits your goals. Step 2. What's your investment style? Now that you understand what investing is, we need to figure out what kind of investor you want to be. Are you looking for long-term growth? Are you interested in short-term trades? Do you want to actively manage your portfolio? Or would you rather set it and forget it? Most beginners fall into one of two categories. Passive investors tend to invest in broad market ETFs or use robo-advisors. It's hands-off. You automate everything, sit back, and let time do the work. Perfect if you're investing for retirement or long-term goals. Then we've got active traders. This group is buying and selling stocks, crypto, forex, often in short time frames. It can be exciting, but it also takes time, education, and emotional control. So ask yourself, how much time can I realistically commit to this? How comfortable am I with losing money sometimes? Do I enjoy analyzing charts and trends, or do I prefer simplicity? Your answers will help you choose the approach that fits your lifestyle and temperament. Step 3. Opening your first investment account. Let's talk logistics. You can't invest until you have a brokerage account. The good news? Opening one today is easier than ever, and you don't need to live in a financial capital to do it. Here are a few beginner-friendly platforms to consider, depending on where you live. crystalballmarkets.com, if you want a clean, simple interface, demo trading options, and access to digital options, crypto, forex, and stocks, this is a great place to start. Robinhood, eToro, or Fidelity, for those of you in the US, Wealthsimple if you're based in Canada. Revolut or DeGiro, popular in the UK and across the EU. Interactive Brokers is a solid global platform, especially if you're ready for advanced tools. Now, if you're still not ready to risk real money, no problem. Most of these platforms offer demo or paper trading accounts. That means you can practice placing trades with fake money, but in real-time market conditions. Highly recommend starting here. You'll build confidence and make your rookie mistakes without burning cash. Step 4. Speak the language, learn the lingo. Every beginner needs to speak at least a little investing language. So here's a quick crash course. A stock is a piece of ownership in a company. A dividend is a profit-sharing payment that some companies give to shareholders. Your portfolio is your full collection of investments. Diversification means spreading your money out so you're not exposed to one big risk. A bull market is when prices are rising. A bear market is when they're falling. Volatility is how wildly prices move up or down. A market order buys or sells at the current price. A limit order only executes at the price you set. Don't worry about mastering all of this at once. You'll pick it up over time. And hey, if you're more of a listener than a reader, try tuning into a stock market basics podcast during your commute or while you're cooking dinner. Passive learning is powerful. Step 5. Start small. Even $100 is enough. This is a big one. You do not need thousands of dollars to start investing. Searches like how to invest with $100 are trending for a reason. It's real. It's doable. Platforms like crystalballmarkets.com, Robinhood, and eToro offer fractional shares, so you can own a piece of Amazon, Apple, or Tesla, even if the full share costs hundreds. You can also use micro-investing apps like Acorns that round up your purchases and invest the spare change. And then there's dollar cost averaging, where you invest the same amount every week or month, no matter what the market is doing. It smooths out the bumps and builds discipline. Step 6. Thinking about crypto? Proceed with caution. Crypto is exciting, but don't rush in blind. Before you invest, learn how blockchain works. Understand why coins like Bitcoin or Ethereum even exist. Don't just buy because it's trending on Twitter. If you decide to invest, use secure exchanges like Coinbase, Binance, or crystalballmarkets.com, and always use two-factor authentication. And here's the golden rule. Keep crypto to no more than 5 to 10% of your total portfolio. It's high risk, high reward. Don't bet the house. Step 7. Automate where you can. Here's a powerful tip. If you automate your investing, you take emotion out of the equation. Set up automatic transfers from your bank account to your brokerage account, recurring buys for your ETFs or stocks, or use a robo-advisor to manage everything based on your risk profile and timeline. Automation is your best friend. It builds consistency and wealth behind the scenes. Step 8. Mistakes to avoid. Let's finish strong with some beginner mistakes to avoid. Don't try to time the market. Even pros get it wrong. Don't chase meme stocks or Reddit hype. Don't ignore fees. They quietly eat into your returns. Don't skip diversification. Spread your risk. And above all, don't panic. Markets go up and down. Stick to your plan. You're playing the long game. Keep that in mind. Bonus tip, keep learning. Investing isn't a one and done thing. The best investors keep learning. Follow financial creators on YouTube or TikTok, the educational ones, not the hype machines. Subscribe to newsletters, read books, join forums, and keep tuning into podcasts like this one. Closing thoughts. You don't need to be rich. You don't need to be a genius. You just need to start. Open your account. Learn the basics. Start with what you've got. And keep showing up. If you're looking for a platform that makes this easy, check out crystalballmarkets.com. They've got beginner tools, demo trading, and access to a wide range of markets. Remember, the biggest mistake is waiting too long to begin. Start where you are. Use what you have. Build as you go. You've got this. Thanks for tuning in to Financial Market Insights for Traders. I'm your host, Sophia, and I'll catch you in the next episode.